Morning everyone. Quick update. So as you know, we started the new challenge. We're going to hop straight into it. Right now we've started off, unfortunately couldn't capture it by the way, but we've started off in the green and a nice win, which we're pleased about. I think it's about a 21% win. You can see so it starts off with a $500 account. Actually, it was slightly over. I think I had like $533, so it was just some odds. So I thought, well, no one's keeping count. But we did have a decent little 20% win on the first one. So we're going to go over that and just kind of give a little bit of an overview on where we are with things. So let's hop straight in. My trade was a short, obviously, and it was at 19,400. I got into the trade. I saw this candle here. We came back into the MFI at that 80 mark, and then we kind of bobbled around for a little bit on this. I was just kind of scoping and seeing what was going on, and then we saw, these two big red candles come in. So I waited for this one to just come up and tag the 19,400. Which it did, and then we got out about 19,200 for a nice little profit. So we're starting off with a win. If you remember on the first challenge, we started off on a $44 loss, so nice to see a little bit of improvement. Weekends are normally less volatile, so just kind of seeing what I want to do at this moment in time, trying to figure out what the markets are looking like. I mean, right now, we're on the hour, looking potentially like we maybe want to get into a long position. I just don't like to do longs. That's my only concern. Where I would be interested in a long is if it comes back down and retests the 18,800 mark, somewhere around here. I would potentially consider a long. Right now, we've still got some bearish momentum on the squeeze momentum. We're already oversold on the MFI as well. So maybe what I think might happen and could play out is we can get some more continuation to the downside. And then we start to see the over exhaustion on the squeeze momentum indicator start to go dark red, to indicate that the bears are losing momentum. It has been a fairly decent downside move to eradicate the initial move to the upside. So we'll see. The other thing that's kind of that I'm looking at the moment is, so we've come, again, we're only on the hour time frame. We've reverted back into bullish momentum. Obviously, it was bound to happen when we come into that crazy rally that we've seen. That was some move. What was that move? Let's have a look. What's here, isn't it? Sorry. Let's see. So we went from here up to here. It was a 12.27 move. That was some move. 2,185 points. That's if you got in on that move, well done. There were some signs realistically, and this is why I was kicking myself off the first session. We were massively overexhausted on the 1 hour. And what I always like to look at, by the way, when you're looking at the MFI, is not getting in realistically on the point that it touches, but actually on the point that it re-enters. And if you did that, wow, well, you might have missed the initial move, but actually you've still got what would that have been if you'd got in on that re-entry, which would have been there. Still 9.17 move, or a 1680 pip move, which would have been lovely in terms of profit. But I can't get my head around longing in a bearish market. Even if you do get a nice win like that, ultimately it's going to come back down. And that's of course for us we got a little squeeze from the 400 to the 200 mark. So where's that? Let me just 19.2. Where are we? Somewhere around here. It's not precise. About there, isn't it? Yeah. Wasn't a massive move, but it's still a nice move. About a 1% move. It was actually 200-point move. So let's see. I mean, look, as I said, the only thing I'm probably going to look at, only because we're over exhausted, and it looks like we're going to be over exhausted as well on the squeeze momentum. But the volume's starting to trickle down now. You can see volume starting to reduce. What are we saying on the 4 hour? And you can see on the order block here that it completely, perfectly timed that as well. It's bounced off here once already. We're at the 1960 mark. So we've got this short range here between the two order blocks. One's bearish at the, what's that, on the 4 hour, this is on the 19,435, and then we go bullish on the 19,060. So it's going to be interesting to see how this range trades. What I'd like to see is for it to tag this again to confirm, and maybe I may look at a long with a very short stop. So I'd probably maybe look at a stop around the 18,950 mark, just below me order block channel. So that wouldn't be too bad. That's what I'm going to do. I'm going to look to long. I mean, we are starting to lose momentum on the 4 hour. That's the only problem on the squeeze momentum, and we're also nearing the top side. And here's the interesting thing, for because the volume was relatively low and there wasn't many bulls fighting against these moves from here to here, it's virtually done. Well, it hasn't done an awful lot on the actual momentum indicator. So realistically, that can still go further down. And this is why you need to look at different time frames, not just focus on the 1 hour, because they all tell a different story. I mean, looking at this now, theoretically we can still continue to the upside. We've got some more momentum to go. Many times we see this activity where we start off bullish, we get a couple of signals that suggest that it's now losing momentum on the bullish, but then you get another light green bullish momentum indicator, and then it drops off and then it doubles up again here. So it's not, the squeeze momentum is it's not my favorite, but it still gives you kind of an insight into normally where you see it, which is this kind of frame here, where you get all the candles are light red to indicate that there's bearish momentum, and then it comes to the over exhausted area where it starts to drop off, and then that coincides with the uptick in the MFI. So what I'm saying is, that's not to say that this next 4 hour candle might not be a bullish one, because it still can. And that's why potentially I might look at this area for a little snipe long from the 90. Well, let's have a look what that would look like. So where's that? Let's see the price range. If we got in here and took it up to say here, we're looking at a 370 pip move, which would be a nice a nice move for us. It would be a nice move, probably about a 30%, nearly 40% move for us. The other thing I just want to see is where we are on the fib. So I think the natural retracement level is the 18,800, which is why I'm looking at the 18,800 as another move. Let me just see if I'll squeeze that a little bit because that volume's in the way. But if we look at the fib retracements, let's see. So we go from our swing low, which is here, our swing high. Which is there, slightly off. But let me just make sure the difference when it's off. There. So it's the 18,645 is the potential retracement, depending on whether it comes into this kind of area here, which is somewhere between 18,600 and 18,800 or 18,900. But the order block's confirming that there's orders around these around this level here, which is the 19,035. So let's test it. I'm going to do one of my educational sessions on the order block finder. It's a pretty cool way of visualizing where liquidity is lying and where orders have been in, as a good way to get in. But you don't just want to hit it the moment it comes in. You want to see it retested a few times, drill down into the smaller time frames. So again, if we go into the hour time frame, this is that same order block, but it's a little bit less here. That's the 1965 mark. And then what happens if we go to the 15-minute? Yeah. This whole area is an interesting area for longing. I am going against my better judgment, as I don't like to trade. But I don't like to trade long. But anyway, we can make money both ways, can't we? That's the reality. So let's see. We've tagged this a few times, but I always like to go on the higher time frames. In terms of using the order block, I feel like it gives you, better tags. I mean, look, here's something interesting just to look. If we go on the monthly and look at the order block, if you was to follow the order block since the inception of Bitcoin, let me just. We've only ever had 3 order blocks. So we had a bearish one here back in 2018, which would have took you from around 7,000, 8,000 Bitcoin price to 3,565 or whatever. Then you go bullish. This would have took you up to, well, you wouldn't, realistically, it's not like you would have held on for this long, of course, but you would have gone from here all the way up. You could have got back in here as well if you decided to sell off, but all the way up to here, and we still haven't had on the monthly candles anyway another order block signal. But in terms of the signaling here, it's a huge, it's a win, isn't it? So it was right here, it's been right there, and it's been right there. What about the weekly? just out a bit. So we had a bearish signal on the order block here. We then had a bullish down here, so that was fine. We don't have another signal until all the way here. So you know, if you rode that, what was that? If you rode this signal from here, the next bearish one was here, and it timed it absolutely perfectly. I mean, look at that. 16,460, sorry, 1,646% move. Just insane. It's probably one of the better order blocks. There's another one, order block by BB or order BB, which I also like to use, but this is probably my favourite one. But it yeah, even on the weekly smashed it. What about the daily? Bit more noisy, but again, I always think you shouldn't really use these to say, okay, well, I'm going to go from one order block to the next order block until it's a sell. It's just whatever feels comfortable in terms of taking your profit, rather than just, you know, blindly using the order block purely as a signal to get in and then get out. It's just, you know, you use your own kind of use your own judgment on these. But maybe let's just zoom into a little bit of it into this one here. So right now we're in a bearish one. You would expect that. We're in a bearish market. This is that bullish one. Where I think this is when we hit that 17k, around the 17,500 mark. Obviously we had that nice reversal, and then we came back down. Still didn't have a bearish order block at that point, and it was only here when we hit the 22, dropped down further again, and now we have another bearish order block, which tells me ultimately we're looking at further downside momentum. So just to get back into where we are, let's just review. So we're on the 4 hour. I will do a more of an in-depth session on the order block, but just for now, it's something I've been incorporating lately, which is a fairly decent signal, along with obviously your other signal and oscillating signals that I also like to use. So let me just zoom in a little tad. And also, don't forget, I also like to use Bookmap as well, and that's more for flow, order flow. So what we're looking at with the order block, by the way, is the last 2 live long and bearish signals, and that's given us a nice little channel. So yeah, I think I'm going to wait for the retest. I'm going to wait for the retest around somewhere around the 19k. It's the range. Yeah, the heart line is the line that you're mainly looking at, but it gives a range because it's not 100%. So you need to use some sort of level of judgment on it, whether you're more bearish, whether you're more adverse to risk or not, depending on where you want it. But it's tagged it perfectly here. Okay, I think that's it for this one. As I say, looking at getting a long position at the 19,000 around this area, and I'll maybe just let it ride up to somewhere around here. But we'll see. I'll let you know. Okay. Cheers, peoples. Speak to you soon. Have a lovely day, and yeah, that's about it for me.